Good afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital, and it is Thursday, November the 30th. I just want to take a brief minute to discuss what markets did last week as the November rally continued in the equity markets, with the S&P 500 being up an even 1% on the week. The mid-cap index was right behind, up 93 basis points or 0.93%, and the small caps lagged behind, but still a positive week, up 20 basis points or 0.2%. So wow, what a rally we have seen in the month of November. The S&P 500, as we're talking right now, is up 10.5% for the month of November. What an incredible run that we've seen. And as we were talking last month, this is seasonally the very best time of the year for the equity markets, seasonally very strong. The retail investors strong, the consumers strong, and the market continues to do well in the fourth quarter. But it took a little bit longer to start the rally. The late year rally this year normally starts in mid-October, but waited till the very end of October of this year to really start this rally. And it was all based on interest rates, as we've talked about, and as we're talking today, interest rates continue to fall. On the 10-year is below 4.3% as of today. And the big news that we got this morning was core PCE inflation data. And that is the data that the Fed really looks at when they look at inflation. While we look at the headline CPI and we look at that year over year, they really focus on that core PCE, which came out today. Last month was at 3.7. 2 months ago was 3.7. Last month, or a month of October, was 3.5%. And you're seeing the market rally off of that and interest rates fall. And that is letting the Fed know that inflation's coming down. They aren't going to have to do more. They want to continue to see it falling on that trajectory and continuing to move down. But one of the things that we are going to be looking for is, at the beginning of this year, we had such a transition out of the market and into money market funds, bonds, and fixed income vehicles, where money market funds sit at an all-time high right now of $6.1 trillion. So the question about the rest of the year is, can the rally continue, and what does that look like? Well, a couple of things to really point out here. The market this year has really been led higher by those 7 names that we've talked about, the Magnificent Seven. They really have led the index higher. And so what we're going to look to see is one of two things are probably going to happen for the remainder of the year. You're going to see the market broaden out, and what will happen is you're going to, because new money is not coming into the equity markets, you're going to sell your winners, your Magnificent Seven, and then you're going to buy the average stock. And what you may see is what exactly you're seeing today. You're seeing the Dow outperform the S&P. The S&P is kind of flat today as we're talking right now. But if you look at the equal weight S&P 500, it's actually positive right now. And the average stock is outperforming the index. The other side of the coin is growth is up 35% year to date, where value is up 3% year to date. Now, we have a term or a phrase that we coin in the industry. It's called reversion to the mean, meaning the growth is going to come down and the value is going to come up, and they're going to meet somewhere in the middle because you're going to sell growth by value. So unless new money doesn't come into the equity markets, expect the markets to kind of remain relatively flattish, but a lot of action underneath the surface, and the average stock probably doing well. And we really believe that this rally can continue. The consumer continues to do well. We had record Black Friday sales. Retail sales were up 0.2% month over month. And we're coming back now down to 2019 levels. And we're getting back to some normalization. Remember, we flooded the economy with money, told everyone to go spend it, and now that's worked its way through, and now we still have a relatively healthy economy, and one that's growing, that's not going to grow at the gangbusters rate, but has some stimulus going into 24 to keep it moving forward. So if you have questions about how to position yourself as you're heading to the rest of this year, again, we really believe that this rally is going to continue for the remainder of the year and into 24, but it may not be one that looks like the S&P's up another 10% in the month of December, but the market itself is actually higher because the average stock will start to participate. Ones that have good balance sheets, great earnings potential, and are growing are going to start to do well. and you'll see those in the cyclical sector. So if you have questions about how to navigate through this and enjoy the rally, call us. We'd love to talk to you. You can reach us at 904-346-3460, or as always, check us out online at www.riverplacecapital.com. I hope everyone has a wonderful rest of your week. Thanks so much for watching.